Hello, everyone. Thank you for joining us today. Welcome to ProStar's Q2 investor meeting. My name is Marvin Lopez. I am the Director of Client Success at Point Man by ProStar. It is my pleasure to moderate today's meeting. We have an exciting agenda lined up, and I'm thrilled to introduce our distinguished panelists. Joining us today are Paige Tucker, our visionary CEO, Pat Clawson, one of our esteemed members of the board, our Chief Financial Officer, Jonathan Richards, and Louis Suchy, the ProStar's Chief Technology Officer. Without further ado, I'd like to turn it over to Paige Tucker, who will kick things off with some opening remarks. Paige, floor is yours. Thank you.
First of all, thanks for everyone joining us. We had a really good second quarter following what I considered to be a good first quarter. It seems that we're turning the corner, although I know we still have to keep our foot on the pedal, keep our sleeves rolled up, and diligently continue to onboard customers. But we did have a really good second quarter, and hopefully we're off to a good start now in the third quarter, and we can continue the momentum. You'll hear me throughout the presentation talk about a digital transformation. I think it's a pretty elaborate phrase that's used quite often. What I really mean by that is when we're talking about the construction industry, which has historically been slow to adopt innovative technologies, they're still well entrenched in their business practices, which include manual processes. In some cases, they're still using paper. Several other industries that would include the health industry, insurance industry, the financial industry have gone through a digital transformation, and the construction industry seems to be one of the last holdouts. But we're getting clear indications that the industry is now transforming, and we have some large companies that I call influencers that are starting to adopt our technology, which has given us a significant amount of credibility and visibility into the market. And we've spent years creating what I consider to be a brand name, which is Point Man, which is becoming recognized throughout the industry, not only in North America, but we're starting to get traction in other parts of the world. And I'm hoping as we go through the presentation that you're as excited as I am with some of the milestones that we've been able to achieve. So without any further ado, I want to get started. And Pat, I think we're going to start with you to go over some sales and marketing.
Perfect. Coming off mute. Thank you. All right, Garrett. First of all, I'd like to communicate with everyone, kind of the process and the success over the last year and a bit. So we've been driving a sales process. It's a proven playbook for building revenue in early stage SaaS companies, which we clearly are. We are setting performance expectations on a daily basis and measuring progress to those on a daily basis. The graph is just an indicator of the upward trend of all those activities. Both the low value sales activities, but also the higher value ones, the appointments that are held, the demos that are held, new opportunities created, etc. If we go to the next slide, this is kind of a continuation. So when we get the lower value sales activities executing well, it starts to lend itself to the higher value sales activities. So we continue to increase our outbound sales activity. Our number of quarterly discovery calls continues to increase, which is our first time, meeting with somebody. Our number of opportunities created is continuing to increase. And ultimately, the one we care about is the number of new cloud accounts that are sold on a quarterly basis continues to increase. You go to the next slide. Our revenue team highlights kind of look like this. I'm trying to keep it, to the point. So we crossed the 100 cloud account threshold last quarter. We increased the number of quarterly discovery calls that we've done. The number of opportunities that we created increased over the previous quarter and quarters. Increased the number of new cloud accounts that we'd sold to our highest number ever, and we increased our average deal size. We have increased our pricing, and we were able to exceed our internal bookings plan by 120% in our Q2. So all in all, very good fundamentals that are proving to deliver very good cloud sales results. Paige?
Thank you, Pat. I think next what we're going to do is have Lewis touch on some of the technology innovations and advancements that he's made, including streamlining our operations, also adding in APIs, which has improved our efficiencies. But Lewis, I'll leave it up to you to explain in detail what you're working on.
Great, thanks, Paige. Garrett, we can go to the next slide. So a couple of just high-level points here on updates we've made to the product in the last quarter. First and foremost, Appointment is now what we believe is the industry first app to allow for cloud backup of all mobile projects. This really stems from the hardware and architectural efficiencies we were able to make in the second half of last year, starting to pay dividends, where we've got costs under control to a place that we can provide this sort of large amount of functionality to all of our customers. This really helps them from a pain point perspective, in the sense of if they ever lose their phone or need to get a new phone, it's no longer an issue to move devices and continue to use Pointman to sort of provide services and allow them to do the jobs they're looking to do. In addition, from our perspective, it also means all of their data is always in our cloud, and it really streamlines the sort of ease it takes to go from being maybe just a Plus user only on mobile into a cloud user. No data conversions, no uploads are required. Simply go to the website or to our store, upgrade from Plus to Pro, and immediately all of the data is available within our cloud. Secondly, here within Pro, we've added support in a beta fashion for now, but available to everybody later in Q3. The ability to export directly in CAD formats. The first of those formats we're supporting is DGN, and there's roadmap plans for additional formats such as DWG into the future. Again, really sort of ease of use focused for our customers using our Pro Cloud, who are integrating with AutoCAD systems or other systems that are looking for CAD file types, rather than having to do a conversion outside of Pointman. They can get data in that format natively directly from the app. Next here, in terms of enterprise customers, we've implemented the ability to do GIS data streaming. What this really is an API that allows us to use external map data sources within Pointman itself. So some bigger ones out there are, our GIS supports this, Propeller Systems and their sort of drone-based imagery has support for this, as well as US government in particular services such as NOAA or NASA. Even in the early stages, in the first couple of customers we've seen using this, we've seen some really interesting use cases, things like people overlaying utility data with like NOAA satellite images post a hurricane or post a wildfire, and giving people the ability to sort of understand maybe when a natural disaster occurs, what the impact on the utility infrastructure could actually be. Maybe moving now beyond Pointman features directly into the cost optimization that we've had going on for the last year or so. In the first half of the year, we sort of, again, took some deeper looks at what we were spending in sort of the state of the application and the maturity of the product, and we were able to make some additional cost concessions, and we reduced the spend on product and engineering by around $750,000 a year. In addition to that cost spend, what we've also done is sort of really solidified around a central core team that is, the most critical part of the product and technology organization, set them up for success, as well as given us the ability to optimize for future growth. Like as our number of customers continue to scale, as we look to scale into additional markets, or to accelerate the way the rate at which we want to add additional features, we now have the option to do that both with our internal resources as well as leverage external resources, whether they be in Latin America or in Eastern Europe or in Asia. This is a model I've definitely used before in previous organizations, where we were able to provide efficiency and add resources and add capacity when they're needed on a project by project or a quarter by quarter basis, without sort of necessarily needing to always make long-term commitments. You can go to the next slide, Garrett. shifting gears a little bit, I wanted to talk a little bit about AI in PointMan, in particular, what we've already done here around sales and marketing. So we've actually, with the things I'm going to talk about here, we've actually seen about a 34% improvement in customer engagement as we've implemented AI within the sales development, sales, and marketing organizations. And some of the ways that we've done that was through the use of AI-generated video features showing off products and helping with customer support. I know Marvin's on the call. Marvin's really been sort of the leader of this effort, and he's done an amazing job of us working together to sort of make this happen. But it allows us to create very efficiently and very cost effectively, very professional looking overviews for support, as well as for marketing, that really demonstrate the value of PointMan to our users in a way that is probably impossible without the use of the video medium. Secondly, we've begun to use AI-based content to surgically target sales development, right? So we can go into these super tiny micro segments and simply and easily create content that is tailored directly through them using LLMs that are trained on the products and services that we offer, right? Historically, this would have taken an army of folks in SDRs or in content marketing to create all these different variations, and it's been amazing to see our ability to do it now with a couple of people in a couple of days, rather than giant consulting firms or anything like that involved. And then lastly is we've invested in SDR outreach automation. So as we reach out to folks in the industry, as we sort of leverage tools like LinkedIn to build communication networks, we've worked hard with our colleagues in sales and marketing to automate those features to sort of allow them to maximize as efficiently as possible the number of potential leads and contacts that they're able to interact with. Next slide. And then lastly here, outside of just the sales and marketing effort, we've also begun to think about how we can use AI within the product itself. And there's a couple of areas here. I would call these in the research phase today, where we're thinking about where we think AI will have the most impact on PointMan going forward. First of all is on the automated data quality control. So the ability to help our customers understand is if the data they're collecting is as accurate as they believe it to be, or if there's error in collections or there's errors with the hardware they're using, to provide that feedback to them in the field as quickly as possible. Secondly, is internally for us within engineering, the ability to more quickly support new hardware from our device partners, right? So historically, that may have taken 4 to 6 weeks for us to build an integration. We've already done some work, and we've got that from, say, 4 to 6 weeks to maybe 2 weeks on average as it stands today. But I think there's really an opportunity for AI here to go even beyond that 2-week period to reduce that amount of time to support additional hardware to be even less. This one allows us to be quickest to market, and then secondly, also sort of help managing cost and efficiency around continuing to expand the net of supported hardware that PointMan has. And then lastly here is faster enterprise integrations, right? So the ability for us to leverage AI to build those custom workflows that our largest customers and DOTs are looking for, right? At the largest enterprise scale, all of those workflows there, they all tend to be bespoke and have unique sort of niche requirements, and there's really an opportunity there for AI to really help us tailor our existing flexible platform to sort of exactly meet the needs of our customers. I think that was the last of the slides. So Paige, I'll hand it off back to you.
Louis, thank you very much. Just a couple points I'd like to elaborate on. You touched on initially that with PointMan, we now have cloud storage for their data. And just to make sure that we're not confusing anyone, we have 2 different products, as you may recall. We have PointMan Plus, which is the standalone mobile app. And then, of course, we have Pro, which includes mobile and cloud. What Louis was alluding to, that we feel that we are the first company that provides this from a mobile app standpoint, is that on Plus, which is standalone mobile, where the data historically is just stored on the device. What we're doing actually is backing up the data storage now into the cloud. The customer doesn't have access to the data, but in the event they ever misplace or lose or their device is stored, they don't lose the data. We constantly have it backed up in the cloud, similar to what Google does in the Google Cloud or what Apple does in the Apple Cloud. That adds significant value and separates us from any competitor that might also offer a mobile app. But in addition to that, when the client decides they want to migrate from Plus to Pro, at a click of a button, they have all the functionality of Pro, and all their data automatically migrates from the Plus environment into the Pro environment. So it's a great marketing tool for us to do what we refer to as upsell. And we have several customers. For example, recently we had Sunhall that had 3 mobile apps that went to 25 mobile apps. Now it'll be an easy upsell to move them and migrate them to Pro. So I just wanted to touch on that. In addition to that, we're already leveraging offshore resources through contacts and previous companies that Pat worked with. We're actually offshoring a large amount of our sales and marketing efforts to a company called Vajra in India that's paying tremendous amount of dividends to us, not only in the quality of the work that they're providing, but it's huge cost savings as opposed to either doing it internally or leveraging companies that are in the US. So I just wanted to touch on that. So now we'll go into my portion of the presentation. As Pat alluded to, and I think it's an important milestone to be able to discuss, is the fact that we onboarded our 100th cloud customer, and we did that at the end of the second quarter. I always explain to people, especially when I'm in investment meetings, that it's a much heavier lift to get to 100 customers than it will be to get to 200 or to 300 for several reasons. Number one, we've worked with a tremendous variety of customers in different industry sectors, which has allowed us to build out our product to where it is now mature. We can address each one of those market sectors based on unique features and functionality that might be required within each one of those industry sectors. In addition to that, we also have a significant amount of visibility and exposure as a result of working with these customers. For example, when we just signed Garni, that was a result of the fact that they were on a project with Kiewit and were exposed to PointMan. In addition to that, you often have resources that'll work for one company that might move away from that company and go to work for another company, and they'll bring best practices with them. And of course, we feel that PointMan is a best practice, and we're already starting to see that, where someone will leave one company, go to another company. Next thing you know, they're calling us saying, hey, we need to learn a little bit more about your PointMan product, and then eventually we sign them up. So it's based on the fact that the more business you get begets more business, and we expect that to continue to accelerate as we add more clients. But basically, it was a major milestone for us. We celebrated for about 5 minutes and then got back to work. Next. As I mentioned, within each one of these industry sectors, so for example, we have construction, we have Department of Transportation, we have oil and gas, engineering and surveying, we have railway, municipalities, mining, as well as locating. These are all the industry sectors that are impacted by not knowing where utilities and pipelines are buried. And it's taken us years within each one of these sectors to work with the various companies that are involved in the industry sector to build out PointMan to address their specific workflow processes and business practices. And today, as Lewis alluded to, the product is mature. It's fully developed. Yes, we will continue to do enhancements based on client requirements, but we're selling the product as what is known as off the shelf. Whereas before, when we would sell it, there was always additional functionality or features that we had to address to meet their needs. But today, that is very limited. Almost all the customers we're selling to are buying it as is. Some may have some special enhancement needs that they have, but the majority of them don't have any requirements. Next. Some of the key clients that we signed, I'd like to point out for several reasons. Number one, we signed Stake Center. And for those of you that don't know who Stake Center is, I'd just like to do a recap on it. They're the second largest locate company in the United States. They're in 48 states, and they do almost 1 million locates a month. The reason that this is a major milestone is that this is the first major utility locate company that is going to move away from just putting paint marks on the ground, and they're going to use PointMan to digitally capture the precise location of where the utility or pipeline is located, provide that information back to the stakeholder, which of course is the utility or pipeline owner, and charge them for that information so that the utility or pipeline company can update their records, which the majority of the time are not geospatially accurate. And we're confident that once one does it, then the rest will have to follow. And as I go through the presentation, you'll see that we're actually in discussions now with other large locating companies. We also signed Garney, which is the #1 ranked water transmission and storm sewer construction company in the United States. This is very important because, of course, several hundreds of billions of dollars is earmarked in the infrastructure bill to replace or repair our water and sewage systems. And not only are you going to have to identify where the water or sewer systems are located, you're going to have to identify where all the surrounding utilities are buried that are in and around those water and sewer systems. And your water and sewer systems are the ones that are buried the deepest in the ground. So it's going to be a major issue for them to try and identify where all the other utilities and pipelines are buried. We also signed On Transit Group, which, as some of you know and some of you may not, is a consortium of two companies. One is a Dutch construction company, which is Ferrovial. The other one is a French company, which is Vinci, which they comprise the consortium that was awarded the largest public transit project in Toronto. They're tearing Toronto apart, putting in a new metro system. These companies actually contacted us because they were concerned about hitting utilities and pipelines. We also recently signed PCL, which is by far the largest construction company in Canada, but also has operations in the United States and also a footprint in Australia. We recently just signed Haskell, which is another multi-billion-dollar construction company with operations in the United States, Latin America, as well as Asia, and recently just signed Walsh, which I think is actually the largest privately held construction company in the United States with annual revenue of over $6 billion. What I'd like to point out about each one of these customers is that initially, almost all of them start out with a limited amount of PointMan Pro licenses. Normally what they'll do is they might buy half a dozen or a dozen of the PointMan licenses, and they'll test it on one project. Number one, just to get trained and acclimated on using it, but also to see what the value is and the efficiencies it creates in their operations. And then we have an opportunity to upsell them. And in particular, these customers here, each one of them could require anywhere between 200 to 300 licenses each. And we expect to see that upsell opportunity actually kick in. In fact, we're already in discussions with Walsh about adding about 50 licenses just for one project. Next. What I refer to on deck are major companies that are in the process of signing an agreement with us. We're actually in either contract negotiations with them, or they are doing an evaluation of PointMan. For example, I think in the near term here, maybe in the next week or two, we should sign the city of Tucson. This is a major milestone because this is the largest municipality that we will have signed to date. We have other municipalities that we've signed, and as I mentioned, we've added in the features and functionalities that address the specific needs of a smaller municipality. but this will be the first major municipality that we will have signed, which then gives us the credibility and leverage that we can then go and market to the other large municipalities within the United States, Canada, and of course abroad. We're also in discussions with GridHawk that's evaluating PointMan right now. They're the third largest locate company in the United States. In fact, what I need to add on here is another company called Bloodhound. Bloodhound is owned by USIC, which is the largest utility locating company in the United States. Bloodhound contacted us, which is a subsidiary of USIC that specializes in what's called subsurface utility engineering, that said that they want to test PointMan, and they had as many as 400 projects that they would place it on. Pennsylvania Department of Transportation did a very extensive evaluation of several products that are on the market. One of them, of course, being PointMan. And after a lengthy evaluation period, working with their prime engineering firm, which is called HDR, they selected PointMan. They're a government agency, very bureaucratic. I don't know how long it's going to take. Could take several months. But we're very confident that Pennsylvania DOT will be signing up and leveraging PointMan. And then over the next couple of weeks, what I refer to as our Holy Grail, we should be announcing that we signed Jacobs. They're actually going to place us on 2 projects. But Jacobs is the largest engineering and surveying company in the world. They have over 60,000 employees, 400 locations in 40 countries. So we will obviously leverage that, because if we sign Jacobs, it'll open up the ability to market to all the other engineering and surveying firms, because they'll want to know what Jacobs is up to. Next. We're in discussions with Kiewit. This has taken years to get to the point where we have this credibility within Kiewit, but we're in discussions with them, and they have a contract that's going through a redlining process right now with legal to sign an enterprise deal. Historically, they would buy PointMan licenses depending on how many licenses they needed per project. But we've gotten to the point where we have credibility within the organization that we had discussions at the C-level to consider implementing PointMan as an enterprise offering, where they would buy 250 licenses at a time, and that at their own discretion, they would determine which project to place it on. And then once they used up those 250, we would sell them another 250. As far as CDOT is concerned, we'll put out a press release in the next couple of weeks that we just re-signed CDOT after their initial 5-year licensing term. They've signed for another 5 years. We also significantly increased their pricing. We were charging them $150,000 a year. We moved that up to $250,000 a year, which they didn't have an issue. Keep in mind, they were the first DOT and worked very closely with us to help build this out, so they will have preferential pricing. Our MSRP for future DOTs will start at $350,000. But by re-signing them after 5 years, it also gives us the credibility that we can then go out to the other DOTs, which in many cases, I think some of them were watching to see if CDOT would re-sign, because obviously it provides the proof in the pudding that our system is actually working and providing value to the DOTs. Next. Radio detection. As you know, we've been working with radio detection for several months now. They chose PointMan to integrate into the new RD8200 SG, which stands for survey grade. And then we trained roughly about 80 of their salespeople globally to resell PointMan. It started out pretty slow, but we're starting to see an increase in the amount of not only distributors that we're selling to, but also clients that use the RD8200. And again, not only in North America, but in other parts of the world. We're working with a railway company right now in India. We're in discussions with a large company in, I believe it's Indonesia. We've signed distributors, including in Australia and in New Zealand. And then just 2 days ago, for the first time, we actually started to see some promotion. So this was an ad they posted on LinkedIn that talks about the ultimate solution which is the combination of the new RD 8200 combined with PointMan, and we're already starting to get some inquiries as a result of that. And we expect additional advertisements and campaigns that will be coming out from radio detection. They are the largest manufacturer in the world of utility locating devices, so this provides a great opportunity for us to leverage their distribution network to sell PointMan. Next. As Pat mentioned, and this is part of our strategy, in the second quarter, we increased our pricing. We moved it up to $4,950. We recently increased it again by another 40%. So now the base is $6,950. Based on what we provide and what we're offering, we still think this is of extreme value, and it hasn't caused any ripples, if you will, in our ability to sell. In fact, $6,950 is of great value. We will continue to increase our pricing. The goal is to get it up to where the initial starting package is $9,950. That comes with a handful of licenses. And then, of course, after that, it's $950 per license. So about $1,000 per license. So for those of you that are not familiar with our pricing, it's pretty simple pricing model. And it's based on what we call land and expand. Anyone can afford $6,950. Some of these smaller entities that might include a small township or maybe a small engineering and surveying firm, they might be satisfied with just the initial package for $6,950. But if you're a large engineering firm or construction company and you need, for example, 300 licenses, then again, it would start out at $6,950. That comes with 4 licenses. If you need 300 licenses, you'd have to buy 296 more licenses, basically at $1,000 per license. So again, pretty simple math, but it's based on land and expand. A large majority, especially the bigger companies that we have within our current 100 customers, will require a few hundred licenses. It's just a question of how long does it take for us to get in there, for them to place it on a project, and for us to be able to prove the value that we provide in the efficiencies that we create. But again, within our own customer base, there's huge upsell opportunity. And of course, we are working on that. Next. As Pat mentioned, and I went over this in the last meeting, but you can see how things are starting to accelerate and how his sales strategy is starting to pay serious dividends. And a lot of it is based on the amount of outreaches, meaning, the companies that we can contact, follow up with phone calls, and then set demos for the salespeople. And you can see the increase from each quarter. Q1 of last year, we only closed 3 deals, but you could see the outbound reaches continue to accelerate. We went from about 7,700 to almost 18,000. As Pat mentioned to me, he said, just be patient. This is based on sequence and cadence. And more importantly, it's about building up our sales pipeline, because not all the customers, will buy right away or maybe even within 30 days. Some of them might take 6 months. So the more robust our sales pipeline becomes, then that will start to pay dividends in the amount of sales that we recognize monthly. You can see in Q3, we had 32,000 outreaches, 7 deals. Q4, 28,000 outreaches, 14 deals. But you can see where things start to pay off. In Q1, we had a record quarter, and then we followed that up again in Q2 with another record quarter. Our target for each quarter is to close a minimum of 25 deals per quarter. And I base that just based on organic sales, based on how many outreaches we do, how many phone calls, and how many demos we set up. But what we're starting to see is actually what I refer to as pull, as opposed to just pushing into the market, where we're starting to see customers that are contacting us because they're either searching for a solution or, as I mentioned, they heard it through a third party. Next. So you can see at the end of 2022, we had 28 customers. So it was a pretty heavy lift just to get to 28 customers. But of course, we still had a lot of R&D that we had to do to make the product mature and address each one of those market sectors. But you can see in 2023, we increased that to 55 customers. And then, as I mentioned at the end of the second quarter, we crossed our 100th customer. So you can start to see things accelerate. Our goal is to get to 150 by the end of the year. I think that's very attainable. And if we can do that, then there's no reason why we can't be up around 350 customers. And again, this is just focusing on North America. I do expect to see an uptick in sales in other regions of the world, working with the equipment manufacturers and leveraging their sales and marketing network and their distribution network as well. But we'll see how that works out. Next. I like to show this graph because you can see the amount of customers we're having is obviously accelerating. I have a target in there that's just over 200. I think we can get to break even around 225 customers. That's based on how much the average customer spends with us today. But that doesn't take into consideration any type of increased acceleration with the larger clients that will buy a significant amount of more licenses, which would get us there even quicker. Next. So here's our targets for this year. And I think for the first time, we can actually put targets up that we feel confident that we can achieve. Number one, as I mentioned, we'd like to get to 150 total SaaS clients by the end of the year. We'd like to realize adoption by more DOTs. We're in discussion actually with several DOTs, and we're on their radar. But of course, I mentioned that I think PennDOT will be next, just based on the successful evaluation. In addition to that, HDR, which I mentioned was the engineering company that was the prime that did the evaluation on behalf of PennDOT, also works with 6 other DOTs as the engineering and surveying prime, and said that they were going to share the results of the valuation with the other DOTs as well. The goal is also to sign more major billion-plus construction and engineering companies. We're in discussions with several more. Obviously, they provide the greatest opportunity for the number of licenses we can sell. But I think more importantly is the exposure and credibility that they give us in the marketplace. Because once these large companies start to go through what I referred to as the digital transformation, the rest will have to follow. We'd like to realize enterprise expansion from our current larger clients. And what I mean by that is these multi-billion-dollar companies that might start out with only a handful of licenses. There's obviously tremendous opportunity to upsell, 100, 200, 300 licenses within each one of those organizations. And then, of course, accelerate our sales globally through our strategic partners, which includes radio detection. As I mentioned, they're starting to ramp up their sales and marketing and discussing and sharing the benefits, of PointMan being utilized with their equipment. Next. Last but not least, I feel we've got to the point where we're pretty attractive as an investment. This is what I share when I'm doing my presentations to potential investors and also to the investment community when I'm at these conferences. So number one, we solve a significant unmet global problem. The problem of not knowing where utilities and pipelines is a growing concern that impacts all regions of the world. In fact, the infrastructure in other parts of the world is in much worse shape than it is here in North America, and that issue has to be addressed. Our product is proven now to be faster, better, cheaper, and sticky, meaning once they start using it, they will continue using it because it becomes heavily entrenched in their workflow processes. As I mentioned, the total addressable market is global, so it's very, very substantial total addressable market. Our product is scalable, works anywhere in the world through the efforts of Lewis. and how he has streamlined and automated a lot of the processes. We have no scalability issues. We could sign 20 customers today. We could sign 200. We know we have an extensive patent portfolio that was challenged, that we successfully challenged. Also, this is a game-changing technology, and this industry is going through a digital transformation, and we have lots of indications that it's finally starting to happen. It's what I refer to as we're finally turning the corner. A software as a service model is very attractive to the investment community. In addition to that, ours requires very little capital and it's non-people intensive. We have no debt. Our profit margins have increased to 95% gross profit margins. We finally have a clear line of sight to profitability. We know when we're going to be profitable. And it does appear that we're hitting an inflection point. This is becoming much easier to sell. And more importantly, we're starting to sell to the major companies. And we have over 30% insider ownership, which means our goals align with those of the shareholder. And that concludes our presentation for the day. And as usual, I would like to take some questions that I think you can put through the chat room. And I think it's Garrett or maybe it's Marvin that will be reading some of the questions to me.
Yes, sir. It'll be me. Thank you guys for going through all that. I have a couple of questions already that have been coming through. So let's go ahead and get started with that. First question coming up is, when do you expect the Q2 financials to be available?
That's a good question. I get asked quite often as well. I think Jonathan's on the call here, and I'm going to transfer that question over to Jonathan.
Yeah, good afternoon, everyone. I am currently preparing the financial statements. They are due at the end of August. We are targeting to file them the middle of August. So hopefully around August 15, you'll see those go live. Thank you.
Hey, Jonathan, a quick question I have for you. Might put these questions to rest for the future. At the end of the quarter, what is normally the time frame that we turn them around?
So regular quarterlies are due 60 days after quarter end. Annual financials are due 120 days. We normally have them turned around internally within 30 days. Then there's an approval and review process for the management and the board. So we target to file them within 45 days, but sometimes we do need to hold them the full 60 days.
Okay, thank you.
Alrighty, thank you. Next question coming through is, how does ProStar plan to sustain its current growth rate, particularly after achieving significant milestones as the 100th SaaS client?
I think I'll transfer that over to Pat. That's his area of expertise.
And I knew you would. Guys, it's very much a function of pipeline. You know, it's we're no different than any place else. We keep the activity levels high, which keep the new meetings high, which keeps the demos and the opportunities on an ever increasing scale. So that's one. We've increased the quality of our sales talent in the field. We've grown them internally. So people who started with the company without any knowledge and have worked their way up to working in the field with our customers today and closing deals in the field with our prospects and customers today. As Paige said, we're starting to get a bit of a pull from other entities that are calling us into deals now, whereas before it was all, what, we haven't heard of this before, right? It was a complete push. So we are continuing to see growth, but it's very much a function of doing the right things at the very the very top end of that funnel, right? It's a lot of blocking and tackling to keep the opportunity levels high. Hopefully that answers that.
Anybody else want to tag that? Okay, I'll move on. So next question, can you provide more details on the customer acquisition strategy, especially in targeted multinational construction companies?
Oh, absolutely. Yeah, so I think what you're alluding to is some of these multi-billion-dollar companies that we're starting to onboard, and a lot of them are multinational, meaning they operate in several countries. it started out with Kiewit. Once you get Kiewit, then you can start targeting the other large construction companies because they run in similar circles. A lot of them also are very competitive when it comes to bids on these large infrastructure projects. So they all want to know what the other competitor is doing. So, for example, when we bring on PCL, it's much easier to then, announce that, number one, and then start targeting the other similar PCL companies. And it's easy to identify who they are. So the goal is that we start to onboard more of these multi-billion-dollar companies. As I mentioned, I always talk about credibility and visibility. It gives you an easy door to contact, especially at the executive level, these other organizations. Let them know that you're working with PCL. Let them know that you're working with the Haskell. Let them know that you're working with the Walshes of the world and the Kiewits. It becomes much easier, not only to have communications with them, but to have them, somewhat interested in seeing what you're doing. So again, that's why I mentioned, business begets business. And as you get these high profile clients, it's much easier to then attract the other high profile clients. And we will continue with that strategy, and we will be aggressive with it, because obviously it's almost as much work going into signing a small company as it is these multi-billion-dollar companies. So we will continue to target them.
All right. Looks like another question here. How will ProStar address the challenges in scaling its operations to accommodate a growing client base? Apologies.
I don't want to steal the thunder away from Lewis. He's the one that has streamlined our operations and created, I would say, a lot of automation and even utilizing AI. So, Lewis, why don't you take a run at that question? It's based on scalability.
Yeah, sure. Thanks, Paige. Yeah, just as kind of Paige alluded to, I think there's been a lot of focus on that as we've seen sort of the number of customers uptick consistently over these quarters. Is that we've definitely paid effort in attention to how do we as efficiently as possible get people into the platform, right? So in some cases that's automating internal processes, whether through like legacy ways or using AI, as well as taking hard looks at our onboarding process or just a general flow of our app to make sure that customers are able to self-service as much of the process as they possibly can. I think the other important area there is that as we've sort of worked at that efficiency, and as I mentioned earlier, we've set ourselves up now going forward as a way that we can continue to expand through resources in regions outside just the US for on the sort of engineering and support side, just so that as we eventually will need to add additional resources in those areas, we're able to do it as cost effectively as possible.
Alrighty. Thank you, Lewis. Got another question here. What are the company's plans for continuing to enhance its solution in response to either client or industry demands?
I can take that on. So as I mentioned, I like to use the 80-20 rule. As a software company, your product is never fully mature. You're going to have to continue to do enhancements, add features, and maybe more importantly, meet both client and industry demands. Things are always changing. There's new technologies that come out that you need to, say, for example, integrate into. So we will continue to enhance the product, but what we're doing now is we're basing it on the amount of demands that we get from clients. So for example, if we hear the same demand over and over again, we realize that's a very important feature. Then what we do is we prioritize it. And basically what we're doing is we're becoming more disciplined internally on how much resource allocation we do to enhancements and how really important is it. I mean, we have a laundry list of things that we could add into the system, but based on client demand and industry demand and having the discipline to determine what is the most important, I actually makes us more efficient. But we have a laundry list of items right now that we are building into the system. And we can be flexible because something might come along that's actually of a higher priority. But in addition to that, what we're doing, which we didn't do before, and I think in some cases just because we didn't have that credibility, we're charging for it. So if someone wants a major enhancement built into PointMan, then we create what we call an SOW. And then we present that to them and tell them, how much it's going to cost. If it's something that we know is going to add tremendous value, then we might negotiate with them where they help us offset the cost. But as opposed to just continuing to enhance, it is based on the amount of requirements that we're getting from a large number of clients, but the goal is also to charge them for it.
That. Guys, we have a lot of questions coming in, so we apologize if we don't get to them all today. We will make sure to follow up, but a few more here that are coming in while we have time. Next question, what are the company's plans for international expansion?
I'll address that one. So interestingly enough, all the expansion that we're realizing right now as far as internationally is not something that we've been pursuing, which is a good sign. These are companies that are finding us, on the internet, that are reaching out to us, which is a good sign because again, it means that this industry is going through a digital transformation finally. But in addition to that, we are going to leverage our strategic partners. For example, as I mentioned, radio detection. As a result of the partnership we have with radio detection, we're now in discussions with other equipment manufacturers, including Leica. And these companies have a footprint, all over the world, all regions of the world. So our goal is to work through, in particular, the equipment manufacturers through a strategic partnership so that we have outreach through their network into other parts of the world. And I think that we'll start to, gain traction in other parts of the world as a result of that.
All right. Well, thank you, Paige. I think we'll continue to follow up if we are able to answer anybody's question. From all of us here at ProStar, we'd like to wrap up today's meeting. Thank you, everyone, for joining us. I don't know, Paige, if you have any last words you want to close out with, but if not, thank you, everybody, for joining the meeting today. Appreciate it, and we'll definitely be seeing you next time.
Yeah, Marvin, I'll close out by saying,
Yes, sir.
we're just very optimistic about the position we're in right now. I mean, this has been, a long road, if you will. And one thing we have no control over is when will an industry that's somewhat a lagger finally adopt technology to address the inefficiencies that they have as far as their workflow processes. And it looks like we've turned that corner and it's finally starting to happen. So I'm pretty excited about the future, the position we're in. I think we're poised to capitalize on that. But at the end of the day, the proof will be in the pudding, and you should see that based on the news that we start pushing out based on client acquisitions. And other than that, I'd also like to thank everybody, for participating in this meeting. And I think that's a wrap.